Welcome back, early stage investor community. We are watching as the early stages of humanity's mass adoption of nuclear power unfold. The URNM ETF year to date is up 49.79%. That's 50%. The S&P 500, the broader stock market, where everyone's 401ks currently are parked, is only up 12% on the year. So right now, early stage investors are massively winning, and we're still just getting started. This was the best week of uranium news I've ever seen in terms of upward pressure on prices. Rosatom came out this week and said they're not shipping uranium to the US anymore because of insurance costs. Then they backtracked and said they will be fulfilling, but there's really shady things going on behind the scenes here. Russia is actually buying uranium in the same market that Western countries are buying. RBC reporting that Russia may be short pounds. Uranium prices jumped higher this week on strong demand, while supply side concerns persist. Our industry checks indicate increasing participation from non-US buyers recently, including Russian, Chinese, Korean entities. While UXC and Trade Tech report strong activity in the term market, both on and off, Russian involvement has piqued our interest, in particular, as Russia has historically been seen as a self-sufficient on supply, but we don't have sufficient information to read more into this development at this time. Very murky, but why is Russia buying uranium when normally they produce it? Then we get these weird stories out that they're not going to be exporting it. Extremely exciting when you think about the impact and how tight the market is and how dependent the U.S. is on Russian uranium. U.S. uranium imports from Russia were up 2.2-fold in 2022 to 416 tons in the first 6 months of the year, as Washington is forced to admit that it remains heavily dependent on Russian nuclear fuel. The U.S. has its own deposit of uranium, but they are insufficiently developed to supply its burgeoning nuclear power plant sector. So we need Russian uranium. The Russians need uranium. They're buying it off the open market so that they can ship that back to the US, which obviously makes no sense. It's crazy, but would just make the price of uranium even higher, right? In the midst of all this, on September 27, we have financial institutions taking more and more and more uranium out of circulating supply in an already tight market. Yellowcake PLC is proposing purchase of uranium and placing of new ordinary shares. Yellowcake PLC is similar to the Sprott Physical Uranium Trust. They buy up physical off the open market. Today announces its intention to conduct a non-preemptive placing of new ordinary shares. So they're issuing shares to raise gross proceeds of up to $125 million to buy uranium. So we're just getting scarcer and scarcer. At the same time, we have massive contracting. Everyone wants uranium. So we see this spike annualized 2023 in pink, highest long-term contract volume since 2012. With numerous RFPs still expected this year, as per UXC, LT uranium contracting stands at 121 million pounds year to date, representing the highest figure since 2012. Recall that last year, primary uranium production was 130 million pounds, while demand was 180 million pounds, with much more production needed. So bottom line, we're seeing massive demand just starting to unfold, because utilities have to buy ahead of time. And so we have a short-term massive supply crunch. This speaks to the long-term massive supply crunch. Primary uranium mine supply is significantly trailing demand, with a cumulative forecasted supply shortfall of approximately 1.5 billion pounds by 2040, Sprott ETF product manager Jacob White says. The supply crunch is hitting the fan, right? There's not enough supply. We've heard it from utilities. Secondary supply is dried up. We have a massive supply crunch way out in 2040, and we have a massive supply crunch now. Very exciting for the long-term prospects of uranium prices. And because of this, Morgan Stanley weighs in. Our commodity team places uranium at the top of the order of preference of all commodities. So they're bullish: uranium, platinum, coal, aluminum. Very exciting about coal, very excited about uranium. There's still value in this in both spaces. Obviously, we have massive Wall Street firms understanding what is going on. Now, that supply crunch that I just talked about, extending way out into 2040, is going to be made worse by massive ballooning demand like this, with 80 plus small modular reactor designs and development in 18 countries. Regulators and industry face both opportunities and challenges. Okay, so the only solution to the global supply crunch, other than investing billions of dollars into fossil fuels, is to invest in small modular reactors, is to go all out into nuclear, right? So it seems like that's what's happening. It's going to take some time for us to get there, but that's the only outcome. And so it's pretty exciting when you look at world energy. They're not going to do renewables. They're too expensive, not enough yield. They're not going to do fossil fuels unless they really have to, unless the scarcity there gets crazy in oil and coal. But they're most likely going to have to be pushed into nuclear. And that's what we're seeing. Ontario prepares to go big on nuclear with demand for electricity poised to soar. European Commission is willing to consider subsidies for nuclear technology. They haven't even committed yet, but they're willing to consider it. We're still in the early stages. Wait till big money starts pouring into this space even more than it already is. Industry groups and governments pledged to back new nuclear. Representatives of the nuclear industry in OECD nations and representatives of the governments of 20 countries have issued communiques committing to work together to expand nuclear energy capacity. This is where the world is going, diving deep into nuclear. China expects to okay 6 to 8 nuclear power units per year in green energy drive. Where are they going to get all this uranium, right? We already have a massive supply crunch. That is why they're making massive deals with Kazatomprom. Kazatomprom announces 2025 uranium production plan. The full implementation of this decision, so the increase in production, is expected to add up to 6,000 tons of raw uranium to an anticipated global primary supply in 2025 compared to the company's planned range for 2024. So a slight increase, not even close to making a dent in the massive demand for this fuel. Incredibly exciting. We're going to stay on top of this market. We're going to be enjoying the dips in price that we've seen because nothing goes up in a straight line, right? And so get ready. So much more to come. I may be launching my portfolio here soon so you can see exactly what I'm investing in, but this is getting very, very, very exciting, especially on red days as we can accumulate deep value. Thank you guys so much for